Rally on or rally soon over? Simple question. Let's ask Hightower Stephanie Link. She's here with me in Beverly Hills, also a CNBC contributor. It's good to see you out here.
Good to see you.
How about that question? Do we rally on or is this rally soon to fade?
I think we rally on. Seasonally, you're in a very strong position into the end of the year. There's that, right? Secondly, I think that people are coming to grips with inflation actually has come down, made a lot of progress. We got CPI and PPI last week. We are a far cry from where we were a year ago, Scott. We were at almost 12% inflation in PPI and 9% in CPI. And then today, we got the Empire State number, prices paid. That came down. So inflation is still strong, still high. However, we're making progress. That's one. Number two, I think rates have actually stabilized. They're high, but they're stabilizing. The Fed, I don't know if you want to say they're less hawkish or more dovish, but they're different than what they had been. And then, wait.
Yep, go ahead.
And then there's earnings. And earnings so far are better than expected. And
yeah.
I know it's a small sample set, but I'm very encouraged by what I'm seeing, not only in revenue, but in margins as well.
We'll get to that. On rates,
yeah.
The push-pull in the market is, the bulls suggest, to your point, well, the Fed seems to be pivoting. Yep. More dovish, right? The commentary of late has been, well, the credit market's done a lot for us. Maybe we don't have to do anything else. Austin Goolsbee today, right? Chicago Fed president. Trend is, without question, lower for inflation. So that works in your favor. Now, the other side of that is, but rates are still high and the lag effects are still to come. So how do you reconcile those two factors that are leading the bull-bear debate right now? Because
even in the face of higher interest rates, the economy has been pretty resilient. We talk about this all the time. It's the $2 trillion in infrastructure stimulus that, by the way, hasn't even gotten into the economy just yet. So that's going to be a nice tailwind. Consumer is pretty good, right? I mean, we talk about jobs all the time. I always focus on the initial claims number because it's a forward-looking indicator. Really still very strong. Wages are still good. They're not explosive like they were, but at 4.2%, I'll take that. And the consumer also has $2 trillion in savings. So I think as long as the consumer hangs in and manufacturing also has these tailwinds, we can handle higher rates for longer. Okay, so bears are going to be bears, yes,
right? Speaking of, Mike Wilson, Morgan Stanley, talks about weakening breath within the market. Sees stocks down 10%. Says no fourth quarter rally is coming. And to your point on the strong consumer, he says University of Michigan Consumer Sentiment Index fell by the largest month-over-month decline since June of 2022. Consumers tapped out, don't have any more money to spend, dour attitudes about, what's going on with inflation, how much more they can really spend. What do you say?
Well, we have retail sales tomorrow. I think that's the biggest data point of the week other than earnings. And I think it's going to be strong. And I look at companies like American Express, which just came out with September loan growth of 18.3%, led by the consumer up 17%, small, medium businesses up 21%. We heard that Prime Day, the first day of Prime Day, people bought 25 million products online. And that's only the first day of Amazon, right? Pepsi had better than expected organic growth. So I think the consumer is in better shape. If they have money, they're going to spend it, whether they put it on a credit card or they have the cash. We are a nation of spenders.